Herzlich willkommen bei der Edelstoff Media. Ich freue mich heute über Besuch aus London. Zu Gast ist Swetha Ramachandran. Swetha ist Portfoliomanagerin des GAM Luxury Brands Fonds. Warm welcome to sunny Hamburg, Swetha. Thanks for coming to Hamburg. Swetha, you are responsible for a luxury fund. And let me probably start with a more cynical question. The war in the Ukraine is a turning point for the capital markets. Quite cynical, will the luxury brands miss the rich Russians and oligarchs?
Thank you for the question. And of course, it's a great humanitarian crisis that we're experiencing at the moment. For the luxury sector in particular, the Russian consumer makes up about 2% of sales globally. So that loss of that consumer, even though we have an impression of them being very large, won't matter that much because they're quite small in the grander scheme of things. What matters to the luxury sector is the health of the US consumer and the Chinese consumer. Collectively, these two cohorts make up 60% of global luxury demand.
And in general, what impact does this war have on your sector?
I would say, should it persist, there may be over time some feeling the feel-good factor that's quite important for purchasing luxury goods may be affected. So far, we've seen no indication of this happening. What I'm actually much more worried about is these new COVID lockdowns in China, which could have a short-term impact. We've not seen any impact so far from the war in Ukraine.
What is talking about, we have quite some dogs here in. What is the general state of the luxury sector?
So it's really interesting. If you had thought that the pandemic could have made this sector stronger, if I had said that 2 years ago, I think people would have laughed at me, but that's exactly what's happened. Many of the strongest companies in the sector have taken advantage of the crisis to fortify their businesses and make their business models even stronger. So we see companies like LVMH, Richemont, Hermes, their profit margins today are between 500 to 1,000 basis points ahead of where they were pre-pandemic.
So are we talking about a value or a growth story?
I think it's value versus growth is somewhat of a little bit of an artificial distinction. If you look at luxury, it's clearly exposed to growth in the aspirational emerging middle-class consumer, yet it's a sector today that's offering attractive value in our opinion because it trades at a significant discount to its 5-year historical average.
We have seen a tremendous, incredible asset price inflation in the recent years. If you own a old Porsche or a Rolex Daytona, you've done pretty much better than probably with the stocks.
Right, but you can't scale those investments. So as an institutional investor, there's a limit to maybe how many Rolexes, Porsches, and Birkin bags that you can buy that could make that difference to your portfolio. It's also not as liquid as buying the shares of the underlying companies where possible.
Talking about Corona, what has Corona done to the consumer? Do they trust more the luxury brands because of some unknown crisis around them?
So there's a really interesting saying by the CEO of Coca-Cola, which is that a brand is a promise and a good brand is a promise kept. And that's exactly what we're seeing with luxury is that during the crisis, people went to what they knew because they trusted these brands, they knew what they stood for. And as a result, there's been a huge polarization in the sector where the weaker brands are losing a lot of share to the stronger brands. So it's not a case that all brands are winning, but definitely the stronger ones are.
Who were or are the winners and the losers of the past Corona years?
So I think if we need to split this by subsector. If we look at, say, soft luxury, clearly Louis Vuitton and Hermes have been among the winners. In jewelry, I would say Cartier has won a lot of market share. The spirits companies such as Pernod Ricard and Diageo have done a fantastic job as well. In travel, interestingly, the leading brands like Hilton and Marriott are gaining a lot of market share as well.
We have to talk about two keywords of the asset management industry. It's digitalization and it's sustainability. On the subject of sustainability, if you buy cheap, you buy twice. Or the luxury brands sustainability story because you get something you use like a heritage.
So that's exactly the heart of the luxury sector is this ethos of buy less, buy better. There's a statistic from a UK-based charity that suggests that an item bought at a fast fashion store is maybe worn 7 times before it's discarded. Nobody is doing that with an Hermes handbag or a Rolex watch, which is why these purchases are more considered and therefore last longer, minimizing their environmental footprint.
But nevertheless, the half-life of brands became very much shorter. Woolrich and Canada Goose were yesterday, today Moncler, North Face are winners. but that will be over next year probably. I have 3 daughters and I know what I'm talking about. Do you see this development too?
I would partly agree with you, but if we take a step back, Tiffany is a brand that's been around since 1837. Hermes has been around since 1837. Louis Vuitton since 1854. So these are not brands that disappear overnight. Sure, trends come and go, but that said, a good brand that has invested in innovation, in newness, will always be able to stand the test of time. And what's key is being able to tap into the changing consumer and their changing needs and desires, rather than just being a cyclical fad.
Talking about Louis Vuitton, I think those handbags do not have the same quality like they had 10 years before or 20 years before. I think it's this more or less it's cheap stuff for the Asian market sometimes, isn't it?
I would dispute that strongly. I think the notion that the Chinese consumer likes cheap quality is very much out of date. The Chinese consumer is far more sophisticated than their Western counterpart today. They have access to much more social media, much more information about brands, and they are actually looking for high quality, which is why the higher end of that brand's products is what's selling well in China.
If you could choose, Neverfull from the 80s or from today?
I don't know what a Neverfull from the 80s looked like. Well, I mean, I'm here now, so yes, I would take the product today.
Okay,
yes.
Okay. When would you sell a huge percentage of stocks of LVMH in your fund? When would you sell this stock?
So to me, that company is a bit of a compounding machine. Their ability to continue to generate profits and cash flow through the cycle remains very strong. That said, there are also lots of attractive other luxury companies. So if I were to see maybe valuation become much more attractive in a competitor company, I would look to perhaps switch my investment. But I think over the long term, this is a company that is sort of emblematic of the luxury sector. And unless I saw a huge change in emerging markets and the ability of, or the interest in these emerging middle classes to consume luxury, I probably wouldn't sell it.
Talking about digitalization, which companies from your sector are, let's say, role models in this game?
I would say Moncler has been doing an excellent job in digitalization. They have this genius collaboration where they collaborate with different brands and designers in order to reinvigorate their own brand. They have recently been going into skins in video games like Fortnite to provide players with skins. I think Gucci has done a fantastic job as well. If we look at their participation with, say, Roblox, and the fact that they did a Gucci garden, and now we are in a situation where a virtual Gucci bag sells for more than the physical version. It's quite remarkable.
Did you see the movie?
House of Gucci, yes.
Yes, and isn't it let's say from some kind of ironical point of view, funny that Salma Hayek plays the part
yes,
of a
that's
partner
right.
in crime while she is engaged to LVMH?
Well, there were lots of, she is married to the CEO of Kering,
yes,
which owns Gucci. So there were lots of synergies in that movie in general, because some of the, I think Jared Leto, for instance, is one of the ambassadors for the Gucci brand. Mm-hmm. So yeah, it was quite interesting.
Young customers do order more or less only online. What's wrong with Farfetch?
There's nothing wrong with Farfetch. I think what happened was that they saw a lot of growth during the crisis, during lockdowns, because there was nowhere else for consumers to go. But it's not true that young consumers are only going online, because as soon as stores reopened, we saw a huge amount of traffic return to stores. Young people care a lot about experiences, and there's no better way to build an experience as in the physical store, where you could have an exhibition, you could have a glass of champagne, which you can't necessarily when you're buying online. I think Farfetch is well positioned for the long term. It's going through some hiccups at the moment because there was a lot of growth during the lockdown, and now we're not in a lockdown situation, so it's normalizing.
Swetha, thank you very much for this talking. Thank you very much. Meine Damen und Herren, vielen Dank fürs Zuschauen. Wir wünschen Ihnen eine entspannte Zeit.